Hello traders, you are welcome back to the Forex Geek channel. If you are not still following or if you are not yet subscribed to the Forex Geek channel, then you are really missing out because we share a lot of trading tips and strategies for free. Okay, you have a lot to gain, you have a lot to benefit from this channel. Anyways, in this particular video, we are going to be looking at an important strategy known as the bullish crossover strategy. Now, it's nothing new, right? But it's an effective strategy that involves the moving averages. Okay, it's one popular strategy used by traders, and it's just an easy, it's an easy something to spot on your chart. All you just need to do is to have your moving averages, and then when you have uh one of the moving average cross over the other, you get your signal. It's very easy. Okay, as easy as it sounds, it's also effective, right? So without further ado, let's get right into it. Okay, so we are going to be using the 50 EMA and the 200 EMA. Okay, so I'm just going to be adding them to the chart, the 50 EMA and the 200 EMA. So what exactly is a bullish crossover? In simple terms, a bullish crossover is when a faster moving average crosses above a slower moving average. In this video, we are basically looking at bullish crossover. That's what we are focusing on. Okay, we are focusing on the bullish crossover. Now, we can see that the 50 EMA crossed above the 200 EMA at this point. And basically, when that happens, we have a bullish crossover. When you have the smaller or the shorter EMA, when you have the shorter EMA crossing, you can see around this point, we had a, I don't know what's wrong with this. Okay, we can see we had a bullish crossover happening around here, right? So basically that is a buy signal. When that happens, it's a buy signal. It's as easy as you can think of, right? As easy as you can think of to spot. So now you might be thinking, how can something this easy, be profitable? Now just imagine if we had entered a buy trade after we had this crossover. Now just watch, stay with me, stay closely, right? Can you see how this price has been going up all the way from this point, up till now? It is still going up. Now, in as much as this is a very, very easy strategy, it works. You can see after the bullish crossover, the price of the asset has been going up. So if we had entered a buy trade around here and set our stop loss below the previous swing low, or below, if you want a tight stop loss, then just look for the nearest support level and just set your stop loss below that. Can we see? We would have probably set our stop loss below here, and price has been climbing since then. We would have caught somewhere around almost 70 pips by now, about 70 pips, just in the space of, is it 2 days? Yeah, in about 3 days, right? Because this is even the 15 minutes time frame. Okay, it's a 15 minutes time frame. So the strategy works. Basically, all you just have to look out for is the shorter term moving average crossing above the longer term moving average. In this case, the 50 EMA crossing above the 200 EMA, and it is called a golden cross. Okay, it's called a golden cross. Now, why is this crossover so important? Well, it helps traders understand where momentum is heading in the market. Instead of reacting to price changes after they happen, the bullish crossover helps you anticipate shifts as they are developing. This can be a great way to improve your entry points, getting in before the trend fully takes off. All right. Now, timing is everything with crossovers. Okay, while they can signal a shift in trend, false signals can appear during volatile times or in sideways market. That is the reason why it is advisable to focus more on trending markets. Okay, when you are using the bullish crossover to determine your entries for buy trades, it's better that you focus on trending markets. Okay, now when you have a consolidation and you are trying to use the moving averages to determine your entries, you might have some false signals. You might, because the moving averages are lagging indicators, you might find out that, for example, let's use this scenario as an example. Can we see that within this period the market was ranging, right? So imagine if you had entered a buy around here. As you entered a buy around here, before you know it, the price came down already, and it was ranging. Basically, it was ranging around this point. So you might not really get the most out of the crossovers if you are trading a ranging market. So it's best to stick with a trending market. Okay. Now, one thing to watch out for is relying solely on the crossover. Some traders enter trades based only on the crossover without checking other factors like market conditions or volume. This can lead to false signals also, okay? Especially in choppy markets. So always back up your crossover signals with additional analysis. All right, so basically that is it for this video. We have already explained what the bullish crossover is about and how to use it. Basically, it's for entering buy trade and it's more effective in a trending market. All right. I hope you found this video helpful for understanding how to use this effective indicator in your forex trading. If you learned something new today, give this video a thumbs up and hit that subscribe button, and let me know in the comments, have you used the bullish crossover before? What are your thoughts? Thanks for watching, and stay tuned for more trading tips right here on the Forex Geek channel. Until next time, keep those charts open and stay on top of your trades. Thanks for watching once again, and happy trading.